during the first half of this year, no sector gave you better performance than utilities, as yield-starved investors piled into the group. Thanks to the ultra-low interest rates, both in the U.S. and, of course, in the rest of the developed world, the utilities have soared because they're the kind of steady-eddy dividend stocks that represent fabulous bond market alternatives. However, yesterday, Janet Yellen, the Fed chair, said that our economy's improved to the point where we might get a rate hike later this year, possibly as soon as September. And if that happens, then the dividend stocks like the utilities would instantly become less attractive versus bonds. So in the wake of this Fed meeting, what do we make of the utility industry? Well, consider American Electric Power, AEP, the largest power transmission network in the country. It also has a major power generation portfolio serving over 5 million customers in 11 states. Back in January, we started buying AEP from my charitable trust. You can follow along at actionalertsplus.com. It's been an excellent position. It's up more than 20% year to date, including dividends. Although the stock has stalled over the past 4 weeks, even as the S&P 500 has rocketed higher. Can the stock get its momentum back? Well, American Electric Power reported a solid quarter just this morning, delivering 95 cents of earnings per share. That represented an 8% increase versus last year, not to mention a 5-cent beat compared to what the analysts were looking for. Even as its revenue was a little bit light, up 3% year over year. Plus, management reiterated its full-year guidance. Let's see, 8% earnings growth, 3.25% dividend yield, not shabby. Yet the stock barely budged in the news, rallying just 6 cents. So is there more upside left in AEP, or should we be concerned that the stock may have run out of steam? Let's take a closer look with Nick Akins. He's the chairman and CEO of American Electric Power. Find out more about the quarter and the company's prospects. Mr. Akins, welcome back to Mad Money.
Great to be with you again, Jim.
Hey, Nick, you actually had a big earnings surprise. I mean, I'm fine. I don't need one from American Electric Power. But what was the substance of the actual earnings surprise? How did you beat Wall Street's numbers?
Yeah, it wasn't a surprise to us because we've been investing in infrastructure, particularly transmission. As you said, we have the largest transmission system in the country. The earnings profile of transmission continues to improve dramatically. And then also weather. We had more normal weather. Previous quarters, weather was very light. So obviously we had a good outcome as a result.
All right, can you help us? Something that we've been pondering all day is how strong the consumer. In your release, you talk about how normalized residential sales rebounded after declines in the first 3 months. You made it sound like commercial customers doing better, but where do you think the consumer is? Because you touch a lot of people's lives.
Oh, absolutely. I think residential and commercial customers, they both increased during the quarter. And obviously, the usage by customers continues to improve. Now, one issue we have is around industrial load. You look at industrial and manufacturing, we're seeing a slowdown from a oil and gas perspective, and as well mining. Mining obviously is being hit pretty hard. So we're seeing that occur within our service territory, but clearly customers are using the product that we deliver, and also the infrastructure investment around ensuring that they have stability of supply is important, and that's what's inuring to the benefit of AEP shareholders.
Well, I thought it was interesting that in the conference call, you actually said that this was the quarter where you actually saw the impact of low oil and gas. It hadn't really dinged you before that. What do you think happened? It's just finally going through the cycle to the point where it didn't come back and people were laying off people?
Yeah, I think clearly within our territory, we're seeing 22,000 less jobs in oil and gas and mining in our service territory from year to year. So that's a substantial amount of job loss, and a lot of that was in our western territory, which is mainly attributable to Arkansas, Oklahoma, Louisiana, and Texas, and that's oil and gas territory. So you're starting to see a significant slowdown in that activity, although electric loads continue to hang in there. I think in total it was around a 6% reduction. You're seeing more like a 18% reduction in the mining side of things. So it's substantial. So we have to watch that very closely.
Yeah, I was surprised. I mean, Cole, hate it or like it, there's a lot of people losing their jobs in that industry.
Oh, absolutely. They're in a depression in Kentucky and West Virginia. So we've got to be able to make sure that we're investing in other types of resources. We're doing that. We're actually converting some coal stations to natural gas, and as well, we're putting in renewables. So hopefully that'll help out. But obviously, economic development is going to be key for those areas going forward.
I saw the natural gas pick up, and I was thinking, well, we're seeing some of these utilities actually doing some joint deals, actually buying some pipelines. Is it intriguing to you for some of these pipeline companies that are doing so poorly, maybe snap something up for a bargain?
Yeah, I think one issue we look at is the threshold around investments. We have the largest transmission system in the country. So when you look at the ability to deploy capital, you want to be able to do that wisely. And our investments really focus on the electric transmission investments, and also other types of investments that we're making, such as renewables. We continue to move into that space because we're really focused on what the customer experience is going to be in the future. Maybe at some future time, but at this point, we have a runway ahead of us in terms of transmission investment that's really, really good for us.
Hey, Nick, last question. Goldman Sachs put a really positive piece out about you yesterday. And the first thing they said about what makes it attractive is some of the parts. I mean, I know you've got a division that you might sell, but I mean, do you think that that's how I should look at American Electric Power? Is that if you broke it up, it's worth a lot more than it's selling for?
Oh, absolutely. I think we have a substantial diversity within our service territory. We serve 11 states, largest transmission system in the country. Distribution, we continue to invest in heavily, and the generation component obviously is key. But as you see things develop in the future around energy storage, around renewable applications, those are clearly benefits that we see within our service territory as well. So a lot of diversity there, a lot of opportunity to invest.
Well, terrific. Hey, look, I like the upside. My Chapel Trust owns it. It's been a big win for us. That's Nick Akins, Chairman, President, and CEO of American Electric Power. Always good to see you, sir.
Thank you, Jim.
You should always own one of these companies, okay? You have a diversified portfolio. This is the utility to own. That's Nick Akins, Chairman, President, and CEO of American Electric Power. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.